Hey guys, welcome back to the channel. Need to ask the question, is HBM dead, or is this the biggest buy signal in AI right now? We know that Micron just a week ago delivered one of the strongest quarters in the history of semiconductors, and the stock has fallen through the floor. Also, we saw earlier this morning that Google announced they can reduce memory needs by 6%. And all of a sudden, the entire AI trade, or at least the memory side of the AI trade, has started to look like it's wobbling and could crumble. But here's the problem from my perspective. I think the market is completely misunderstanding what is actually happening, because this isn't a demand destruction story. This is a scale acceleration story. And if you don't understand the difference, you could potentially put yourself in the wrong position in the market right now. So today we're going to break down the big stories that impacted Micron that caused all the confusion today. We're going to talk about what Google actually announced today and why I think it's not a bearish sign for the stock. We'll discuss why SK Hynix raising billions of dollars is a signal and not a threat. And then finally, we'll talk about OpenAI's shift away from Sora and how it's potentially quietly changing the kind of memory the future actually needs. By the end of this video, you're going to see why the market thinks efficiency kills demand, but history tells us the exact opposite, and why Micron, the only signal that truly matters to us as investors, may be the fact that they are sold out through all of 2026. If you haven't done it already, hit like, hit subscribe to the channel. I appreciate you spending time on the channel. Make sure you subscribe. Let's dive in and talk about the story of Micron today. But first, let's talk about the performance overall we saw. And you can see, I just pull up the NASDAQ 100. Actually, guys, it was a pretty decent day today. All of our indexes were up. We saw the Dow Jones Industrial Average up by almost 0.7. The NASDAQ was up by almost 0.8. And the S&P 500 was up over 0.5%. But when I look at the screen, I'm sure you're seeing the same thing. All I can see is that red square right in the middle staring back at me. Micron down negative 3.40. All the other tech stocks around it had a decent day. Like I mentioned, it was a positive day, but it is that red square in the middle that drives my attention and my focus. And if we jump over to what we actually saw today, you'll see on the screen, Micron lost $13.50, almost $13.50 a share. Closed at 382.09, down by 3.4%. In the pre-market right now, the stock is down almost another full percent, down, just $3.38. It's dipped below the 380 right now. So the nice part throughout the day is we did find some support for Micron at that 380 level. There was concern that we were going to drop below that. We're going to drive down to the next level of support, which was about 360, but the stock rallied and it found support there overall in the 380 level. And I would say that I got a call from our text from my brother this morning saying, what is going on with Micron? And I had to sit back and was like, let me give you the laundry list that this stock is dealing with within 5 days. I'm going to give you the full list, but I bet you guys have more. Drop them down in the comments below. But I said, think about the macro issues. And we're talking about Operation Epic Fury, oil, yields, the dollar going up, the VIX index going up across the board, the fear and anxiety that's in the marketplace, all of that happening within the last 5 days, not only affected Micron, affected all stocks, but let's just set that aside beyond the macro issues that we saw. This stock also had to deal with profit taking after a massive earnings they had a week ago. We had massive amount of people that sold and took their profits. Can't blame investors for taking their profits after the stock ran up to about $470 a share. We had that to deal with. We had the CapEx issues to deal with. The announcement that they are pushing their CapEx over $25 billion. The market ran away from that and got the same signal that we saw with all the hyperscalers, just a fear around any spending at all with regards to CapEx for AI. We had competitive threats over the last 5 days from Samsung, from SK Hynix, now a new competitive threat today from Google. We also had concerns over sustainability, even though Micron guided for $10 billion more next quarter over what they just posted a week ago. There was concerns that, have we reached the peak? Is this as good as it will be for Micron? Can the stock get any better? That was the sentiment that was in the marketplace. And on top of all that, we also had the stock get registered on the S&P 500 this week. So we had this exchange of active to passive flows. That is a laundry list for any stock to deal with in a week period of time, or in 5 days in a 5-day trading period. Any stock would have challenges navigating those choppy waters. And we'll be honest, Micron didn't navigate those waters as well as I would have hoped, as well as probably many of you would have hoped on the channel as well. It just didn't. It peaked up at about 470, and it's down, dipping now below 380 a share. We're significantly down from where we were pre-earnings. But we have to be honest with everything this company and this stock has been navigating in the last week. I do feel very optimistic when all of this anxiety is done, when the war is over, that the bull run will be back, and the demand for this company, the demand for their products will drive the stock price high again. And I want to just take us back to one other thing, because this is also something I told my brother at the time. I was like, I just want you to remember, because sometimes we lose sight of this in the short-term windows that we deal with each and every day, is I want you to take a look at where the stock was. And I say, just remember where it was in December. If I just go to the end of the year, we go to the end of the year, where is that? 231, right there. You can see where it closed at the end of last year, 285 a share. And right now, yes, we are down. The stock is at 382. But guys, that's $100 in stock value and shareholder value in 3 months. We can't lose sight of that. As much as the volatility we see right now and the ups and downs, we live in these short windows. We look at red numbers and it drives fear and anxiety in all of us. It drives worry, but we have to remember where the stock was 3 months ago, where it's come from. Many of you on this channel have shared with me that you've got positions way significantly earlier in that. You've seen massive returns with this stock. We have to keep that in the forefront of our mind as well, that this stock has performed. In my opinion, it will continue to perform as well once we get through the turbulent times. But let's jump in and talk about the big stories that impacted the stock today. Let's first talk about what Google actually announced. So let me jump over and share with you the headline first, so we can set the stage. And give me a second, guys. There you go. There's the headline. So this came out this morning. We saw it in probably a lot of different news cycles, but Google announced that they have come up with a way to reduce memory needs overall. They have a portfolio of products, that TurboQuant, I think it is called right here. You can see in a press release, I'll highlight it for you. Google said its new quantization algorithm, TurboQuant, reduces memory requirements for large language models by a remarkable 6x without sacrificing any accuracy overall. So that when that headline hit the news, it caused an immediate reaction, as you would expect. When you see that Google found a way to reduce memory by 6x, the market's immediate reaction was panic. Most of many retail investors were probably panic as well. If AI needs 6x less memory, then demand for players like Micron must be dead, right? That was the thesis overall, and shares tumbled today because of that. But the market is making a classic mistake, in my opinion, because it's ignoring how this technology actually works and how it'll scale. So we need to just take a step back, and we need to understand, how this technology works and what does TurboQuant actually do. TurboQuant goes after something called KV cache, and I want you to think of that as AI's short-term memory. Every time any one of us prompt the model, it stores the context so it can have smarter conversations with us. It can, dialogue with us and remember what we said and pull that back up in the conversation. And as the context windows grows over time, collectively, not just in our own model, but collectively over time, this context window is growing from pages to entire libraries. And as AI models get more powerful, the context windows expand from thousands of tokens to hundreds of thousands of tokens to millions of tokens eventually. This KV cache is exploding in size right now. It's becoming one of the largest consumers, the fastest growing consumers of memory in the entire AI stack. And this is the exact problem that Google was going after, and why they designed their algorithm, as they mentioned, why they designed TurboQuant. It's attacking that problem with KV cache. It's compressing the data from a 16-bit down to just 3 bits. And that's the 6x number that's in all the headlines, just so you understand it. But TurboQuant doesn't stop at just memory. Google also showed that it can deliver 8x performance improvements on GPUs like NVIDIA's H100. So we have to let that sink in, because I think now you can understand the sentiment that was in the market and why it drove prices down. You have less memory, faster performance. That's not just efficiency. That's showing it's a step function improvement in cost per inference. So when that news of both of the factors around less memory, faster improvement hit the market today, there was an immediate reaction. We saw a sell-off for all of the memory stocks, not just Micron. We saw Western Digital, Seagate Technology, SanDisk all sell off as well. But because the immediate conclusion was, it was very simple. If AI needs less memory, memory demand goes down overall, right? That was the thesis that was floated today. That was the sentiment that was driving these stocks down. But the market is getting this completely wrong, because history has shown us something different time and time again. There's a concept called Jevon's paradox, and I'm going to pull up a cartoon for you before we jump in and explain what it is, because I think it's an interesting way to see it sink in. And sorry, guys, that's small, but you can see on the screen, it says Jevon's paradox. Fuel efficiencies gains tend to increase, not decrease fuel use. And then you have two gentlemen on the balcony who say, look at these new cars. They're so efficient. Everyone's driving everywhere these days. That's the concept overall with Jevon's paradox. And I think that's what we're going to see in AI as well, because very simply what Jevon's paradox tells us is that when something becomes more efficient, we don't use less of it. We use a lot more of it. That has been shown time and time again, and AI is no different, in my opinion. If TurboQuant makes inference cheaper, companies aren't going to say that. They won't say, great, let's use less AI. What they will most likely say is, great, let's put AI in everything, in every application, more applications, more users, more queries. And suddenly, even though each interaction uses less memory, the total number of interactions exponentially explodes, which means the total demand can still rise for memory. So Jevon's paradox simply says efficiency doesn't reduce demand. It removes the limits on demand. So where does it leave us overall? Like what is our thinking and takeaway for TurboQuant, or my takeaway from TurboQuant? I would say it is real. The technology is actually pretty promising and very cool overall. And it does directly target one of the fastest growing drivers in AI right now, in that KV cache. But it does not mean that AI needs less memory. What it means is AI is becoming more efficient, and that changes how demand grows overall in AI. The bottom line, the short term overall, I think the market was overreacting to the technical headline today. It saw that headline and reacted out of fear, and it sold the stocks. I think it was an overreaction. But in the long term, TurboQuant doesn't reduce demand for memory, as I mentioned. But what it actually does, it makes AI cheaper, faster, and easier to use, which means more people will use it. And the companies that win won't be the ones with the most chips. It'll be the ones that find a way to use those chips and scale AI everywhere within their system. So that's my takeaway on why I feel TurboQuant is not a bearish sign. I think overall, it's going to increase the demand for AI. The efficiency will bring more demand, which will bring more opportunities for companies like Micron. So let's jump next to the story, which is SK Hynix. I want to talk about that real quickly, because this is their homecoming party overall, coming back to the U.S. They are officially have filed, and let me pull up that story for you. We can just go through. You can see exactly what it is, but they've officially filed for to register on the U.S. market. So I'm going to pull it down. You can see it right here. The SK Hynix has confidentially filed with the U.S. Securities Exchange, or confidently filed with the U.S. Securities and Exchange Commissions for a potential listing on the American Depository Receipts, so an ADR, at the end of this year overall. This, as I mentioned in the beginning, is a bit of a homecoming. SK Hynix, it's been, I think, 25 years since they've been listed in the U.S. market. But this is a massive play for them to be able to tap into some liquidity, some deep liquidity here in the U.S., in the New York markets. We know they're raising funds. We shared the story last night that they signed an agreement with ASML for $8 billion to buy more EVU machines to be able to ramp up supply. Currently, SK Hynix right now, although they are the leader in HBM4 or HBM overall, it's about a 55, we'll call it a 60% share in the market. They are only listed in Seoul, and that it leads to a Korean discount in their valuation. By moving to the U.S., they'll be able to raise capital to fund not only that purchase order with AMSL, but also to fund the massive mega fab in Indiana that they're planning. These moves to me signal that SK Hynix is gearing up for an HBM4 showdown towards the end of this year. A US listing doesn't take any value away from Micron. It highlights how undervalued Micron is compared to its peers. We know what their forward PE is. We know what their PEG ratio is. This company, I showed it the other day in a chart, is significantly undervalued compared to some of their peers in the semiconductor industry. But it's a bit of a double-edged sword for Micron, this moving into the US for SK Hynix. In the short term, it creates competition for investor attention. As I mentioned, some funds may rotate money out of Micron into SK Hynix's new US listing just to diversify their exposure overall. But in the long term, I think it's actually a positive sign for the stock. Because if SK Hynix starts trading and at higher US style valuations, it raises the bar for the entire sector overall. That gives Micron more room to move higher as well in their valuation. So I think this could be seen as a very positive sign, not a threat, but a positive sign that Micron could be reevaluated and there's more room for that evaluation to move upward based on what the company can deliver to the market. Now let's talk about the final piece, the death of Sora. Let's pull over that article just so you can see it. I think it was in the Wall Street Journal here. You can see that OpenAI scrapped Sora video platform months after launch. So I've never been a big fan. I don't know if many of you are on the channel as well. I never really had a need for Sora. So for me, the death of it wasn't a big blow. Hopefully it's not for many of you as well. But despite its viral success, it was known as the TikTok for AI. The model has been taken off the market. OpenAI isn't giving up on video, though. They are refocusing the massive compute on robotics training. And they're doing it for their O1, O2 reasoning models. So Sora was a compute hog, apparently, with low retention. Reasoning models are logic hogs with high enterprise value. So some are saying that OpenAI killing Sora is a proof that AI hit a cost wall. This is what the bears would say. It's hitting a cost wall. You see the applications, the models being taken off the market. This is an example of that. But they're wrong. OpenAI didn't kill Sora because it was too expensive. They killed it because the O1 reasoning models offer a 10x higher return on investment than making viral videos. Reasoning requires persistent memory, data that stays in the DRAM longer than the model thinks. For Micron, this is actually better business model. High turnover video generation wears out hardware. Deep reasoning requires high bandwidth stability. It's a shift from quantity to quality of memory use. So I think this is a positive sign for Micron and for companies that produce high bandwidth memory. Or in this reality, Micron is shifting focus from capacity for video to bandwidth for reasoning. Their HBM3E 12-layer stack are specifically optimized for high-intensity data movement required by OpenAI's new reasoning-heavy architecture. The market thinks AI demand is slowing, but what's actually happening is a shift from viral compute to reasoning compute. So guys, in closing, I would say for all of us investors, as hard as it is, we need to try to ignore the 3%, down 3.5% noise today, the red day today overall. We need to try to ignore the 5 days of trading that have been down. We need to look at the structural reality right now. Micron is sold out of HBM all the way through 2026. Google is making AI more efficient, which will only drive more demand if you believe in Jevon's paradox. SK Hynix coming to the US to raise billion validates the massive validation of this sector overall. It validates the demand we see in this sector. And while OpenAI Sora is gone, the reasoning revolution that it leaves behind is even more memory hungry. Micron is no longer a commodity play. It is a high margin infrastructure of the intelligence age. The market thinks efficiency kills demand. History says efficiency creates entire new markets. If that pattern holds, Micron isn't peaking, it's scaling right now. And the investors who understand that early aren't the ones that are chasing the move. They're ones that are already positioned in the move. Hope you guys enjoyed the video. Have a great night.